is being used to be able to drive the solutions. I think what matters is that, is there really a problem? And if there's a problem, is that technology helping you address that solution? And if then that is the case, then you find that from a regulatory perspective, the principles that govern how then you regulate them still just remain the same. But what then fails to lack is that sometimes you don't have a framework, or you don't have the laws that allow some things to be done. And that's what we're trying to work on at CBK, to see how then we bridge that gap, to make sure that everything is done within. There's no arbitrage, or there's no ambiguity in terms of that regulatory framework.
So does that mean to look at responses in more of being proactive rather than reactive?
I think so. This is what as a regulator, sometimes you can't be proactive. So you'll always find that the industry are more innovative than you are, because that's their day-to-day basis. But what you need to be able to try and make sure is that gap is not too wide. So I may not be proactive in terms of anticipating what technologies will come so that I can regulate, but once the technology then is available, how do I ensure that that gap is reduced or is as minimal as possible? And I think that's usually is the principle, and that's what I've seen happen in many jurisdictions.
Okay, then in light with alignment of the rules and regulations in the industry, Agnes, Safaricom is currently, I think, regulated by over 5 oversight bodies. And most of the time, regulations, it can encourage and it can also inhibit innovation. What is the case for Safaricom?
I want to differ with that statement a bit. I don't think regulation necessarily curtails or stifles innovation. And I think, like in a country like Kenya, we've had the privilege of having forerunners. The people who have done a lot that we can always just copy paste. And then where we find it doesn't quite fit for the industry, we will tweak it and make it work for us. But why I beg to differ with that statement is because, and I like the statement that Michael put out, that the regulator can't always be proactive. They try to be, and I must applaud them for that. All our regulators really try to look into a crystal ball and predict what is the industry going to throw at us. It's not always possible to foresee, and they facilitated it. In the absence of even policy that addressed that particular product, they said, okay, we are going to give the industry our blessing, and let's trial this thing out. If you go to the world stage, M-Pesa is one of those things that, and as Mr. Iganza rightly put in the broad framework of things that will help us move. Do we have consumer protection frameworks, for example? Do we have the right data protection provisions? Even at a time when we did not quite have a data protection legislation in this country, if you look at the telco licenses, there were provisions addressing data protection concerns in there. And that goes to show that actually regulation or regulators do not necessarily stifle innovation. I like the approach that they have taken recently of being facilitators and enablers. We've come to a realization that it's not everything that is going to be prescribed in a law or in a set of policies, and we just have to be ready to roll with it. So what are these things that we need to be ready with so that we can be able to facilitate innovations? What are the key pillars around which innovations emerge? Is it around data? Is it around technologies? And how do we facilitate that? And I think that is one of the things that even drove the Communications Authority of Kenya to come up with a ULF, like a unified licensing framework, which is not tech-specific. So whatever technologies you come up with, there are these broad spectrum licenses that are in place, and you just find a place to plug in, and you can run along with your innovation.
Oh, okay. It's quite interesting. From a technology company perspective, the tech giants, you may not directly report to regulators there, financial and consumer controls are concerned, but what is the battle within technology companies where regulations and policies concerned?
Thank you so much, Eva. I think for us, our tech relies on the internet, and we all understand the nature of the internet. So the biggest struggle that we tend to have is, trying to get a general understanding that with the nature of the internet, trying to have either independent jurisdictions, everyone having their clear set of regulation, can disrupt the very nature of the internet. So those are some of the things that we try to advance, and looking at sort of like a global approach to how can we get sort of like global standards of what we are there to. Because if, for instance, Kenya has a clear set of regulations that's very different from maybe what somebody else is doing, and a classic example in data protection, we face some of these challenges because you find individual jurisdictions having either data localization requirements, but it becomes really, really difficult to adhere to, if we even say Africa, to 54 states in terms of and maintaining the actual nature of the internet or the business or the service that we do provide. So that's one of the things that sometimes creates tension in terms of that. But I always start, or we love to kind of educate people by saying that as a big tech company, as a Meta, we are not anti-regulations. We just advocate for, some general level of standards that take that specific issue into consideration.
All right, okay. I know we may have a couple of founders in the audience. I would like for you to address intellectual property rights. Meta is global and everything. What would you consider a holistic approach to regulation around intellectual property rights?
I guess when we think about intellectual property rights, I think some of the elements to consider, of course, first and foremost is what the needs of the users and the needs of the intellectual property rights. I think those are general considerations that we have to think. But I'd like to think about AI, which is the hottest topic, for instance, in the room. Meta, alongside many other big companies, have been advocating for open source, because I think at some point you have to think about where are you and what are your ambitions, say, as a country. And as you try and do that, there's a lot of maybe innovation trying to happen, but at the same time, there's also the fact that some of the things that have to happen need a lot of resources. So you might find some of the bigger companies investing a lot in time to build some of the models that they have built. So at Meta, we advocate for open source kind of models that we are constructing to allow other upcoming new people to also innovate, to also use, to access the same kind of issues. But this does not say at any given point that we are against or we take a, should I say, predatory approach to some of these things.
Okay. I think that's clear. I want us to talk about collaborations. Technology has introduced a lot of opportunities for collaborations. I'll direct my first question to Mr. Eganza on collaborations.
Yeah.
There are very many licensed entities coming from, financial institutions. There's money remittance, and then there's the upcoming discussion, the digital lenders, there's the PSPs and all that. And collaborations play a key role in getting into the market and getting operations to run in one. What is the regulator's take on possible collaborations, especially in the space of payments and other financial institutions, including M-Pesa? Because I think M-Pesa is one of the entities that is regulated by the CBK. You're smiling, so I'm looking forward to Comtech answer.
No, I'm smiling because you mentioned M-Pesa. So, from a CBK perspective, we have no preference as to whether it's M-Pesa or. So I think all of them are just licensees, and as licensees, they're subjected to the same rules and requirements like any other. So it doesn't matter whether it's M-Pesa or whether it's who. But I think you talk about collaboration, and I think that's something that we are really encouraging a lot of the players that we interact with to do as CBK. And we see, and I can give an example, we see a lot of applications from fintechs and people who come and want to apply for licenses. And one of the key things we've observed of late is that there's a lot of what I'll call duplication of ideas. So everybody thinks that his idea is the most unique when they are with it. But when you look at it, you're like, but I didn't just see the same thing yesterday or the other day or the other day. So you find that one, yes, there's some uniqueness in terms of nuances of ideas, but in assessing some of the applicants that we look at when we're trying to license, we look at so many things. And that's where now collaboration as a practice becomes really a key issue. Because you may find that some entities have very good ideas in terms of what solutions they want to offer, but struggle from a governance perspective, or they don't have the right investment in infrastructure to be able to support the scale-up of their ideas. Partnership. The advantage of that is that not only are they incubated in an environment that has probably better, even from outside. So we do encourage a lot, and a lot of the applicants that we deal with, especially in my area, we try and persuade them to see if they can actually collaborate, or whether that is an easier route for them, because we know that it is not easy. If you have to put in place a whole entity with the right governance structures, with the right investments in terms of infrastructure, it's quite an onerous task. And if you have an idea that is time-bound, maybe it's even easier for you to be able to seek collaboration. And we keep on trying to persuade a lot of the applicants that we deal with to seek that. I think it's the way to go, because you can only have as many institutions or entities that can actually do some of these things. So, but then you need to be able to have those ones that are able to collaborate and scale and can leverage on each other's strengths or competitive advantages to be able to deliver the right solution. So it is indeed a policy that we champion and try and talk to or persuade the applicants that we deal with that maybe collaboration is a better approach than trying to do it yourself. And I know there are founders, it's harder to convince a founder that way, or an entrepreneur that they need to collaborate. But I think a lot of the challenges you see is many a times the feedback then they give is that, is there a collaboration framework? And many of them are scared, and you talked about it, is that if I go and collaborate, will my intellectual property be stolen? How do I still retain that identity and all that? So that talks to the need for there to be a proper framework that allows a lot of these entities, especially the smaller ones, to be able to collaborate with the big ones and the mature ones, so that then it's a win-win for both of them.
Yeah. Right, that's a fantastic answer. Agnes, in light with collaborations, and I think M-Pesa is one of the biggest collaborators in the market, working with many merchants, including other financial non-licensed entities. What are some of the challenges that you face in pursuing these kind of collaborations?
I think the first challenge that we face is, and I'll just put it out there, whenever anyone is approaching Safaricom for anything, they think, this is the place to make the big bucks. All the work will be done, they'll do all the heavy lifting, and I can sit back and just wait for the check to come in, until they realize that actually when we get into these collaborations, it's a partnership. And so there is a lot of work that everybody is required to put in, and that includes regulatory compliance. And so a lot of times we'll be approached by, say, people or partners who want to get into a collaboration, and they've not been duly licensed to carry out what it is they're proposing to do. And so we would have to decline, send them back and say, get the proper documentation to enable us to get into that kind of arrangement that they desire. As a responsible corporate entity, our first order of business is compliance with regulation. And so compliance is not only licensing for the specific service but also compliance with entities like the KRA. So your tax compliance is a big aspect. And we also have partners who perhaps perceive themselves too small to be required to put in place some of those compliance requirements, but then they just have to do it. I don't think it's so much of a regulatory challenge for us as it is for the smaller players who perceive themselves too small for certain levels of compliance, because we would demand that they actually comply before we get into collaboration. But nonetheless, we've been able to actually walk the journey with quite a number of our partners, even our merchants, to the level of merchants that we help facilitate financial literacy, tax compliance, awareness trainings for them, just to bring them up to speed to a level where we don't have to be the ones doing the compliance work for them, but they can do it for themselves. And I think that is also a great way for us to just give back to those small businesses, because then they build their own capacity to be able to carry out their businesses. Beyond collaborating with M-Pesa, they are able to collaborate with any other fintech, and they do have the necessary mechanisms, systems, and documentations that they need before they get into the collaborative arrangements.
All right, and I think it's quite remarkable how you've been able to accommodate very many players in the market where collaboration is concerned. That's quite remarkable as a company.
Yeah.
Back to Sarah. I have a few allegations I can speak of as to the founded or unfounded, as to that Meta more supports more with corporate interests than public policy. What policies do you have internally in place that actually uphold public policy over corporate interest, or in line with corporate interests?
Okay, so first I'll not accept the statement. As I mentioned, in my earlier submission, I talked about the very nature of the internet and the kind of business we provide. As in Meta, on an average, we have up to 3.8 billion, close to 4 billion users across the globe within a span of a month. So that shows we're operating in so many jurisdictions across the world, and one way or another, we are either trying to adhere to the regulation or we have to self-regulate. And I believe that's the nature of many of the other businesses, that you definitely start with your own internal policies. So we do have a set of our own internal rules and policies that are quite strict, trying to take into consideration many of the things that would be problematic for users. So for instance, we have our policies that we call our community standards. This is a very, very comprehensive set of rules. You can find them on our website that look at various issues. At the core of that is safety of our users, because fundamentally we believe that people come to our platforms to have a good experience. And if they do not feel safe, they do not feel like this is the place I have to be, then they have no reason to keep staying. So safety of the users is one of the core principles. Issues around privacy, data protection are all areas that our internal policies look at. So so we do have the set of rules, and they cover so many things from abuse, harm, hate speech, many of the challenges that people would experience if they came online, either to Facebook or Instagram or internally. Internally on WhatsApp, and WhatsApp now is, creating many other options for live broadcasting and everything. So we do have sets of rules that look at some of these things, and they cut across key principles. And it's really about the user having a sense of trust, a sense of safety, a sense of giving them a reason to want to engage in our platforms, but without worrying about some of those issues. So I would not say that our corporate interests become greater than the public good. And as I said earlier, many times we do want regulations to exist, and in the absence of that, we do take initiative to make sure. And one other thing that I wanted to emphasize in our community standards, these are standards that are built with feedback from users, with relying on experts either from the technology space, human rights space, safety space, children's rights, things related. Some of the most problematic things happening around our platform now are around youth and youth safety. We look at some of the issues happening in the US, in Europe. So we do have experts that we rely on. We review these things, I think, every 2 weeks to get a sense of, are we missing out on anything? And how do we then tighten that? Sometimes context change, like conflict, war, many other things. And so we have to ensure that it's an ever-evolving process to make sure that we stay up to date and we're not blindsided by any issues for our users.
So we take it that unfounded allegations.
Yes, I would like to say that.
All right then. Mr. Iganza, technology and innovation by its nature, it's very agile. Every day you sleep on one thing, you wake up the next day, it has completely vanished. And one of the ways that we have seen, or we are seeing entities and institutions being able to work alongside technology and innovation is automation of systems. We have also seen across the globe a good number of central banks that have already started automating their processes in as far as licensing goes, monitoring and everything. Some even have sandboxes for purposes of, putting the innovation where they can have proper oversight. At CBK, do we have any possible automation or sandboxes? I think founders will be happy to hear if we have anything in that line. What's the story at CBK?
So there's a lot of innovation. I think in what I would call, reg tech, supervisory tech kind of innovation. So that are sometimes not market facing, but that allow us to be able to do our work as overseers or much more effectively. So I can give a couple of examples in terms of the innovations that are currently, or the initiatives that are currently undergoing, to be able to illustrate the point. So like at the moment, we are working with our licensed supervised financial institutions by integrating specific APIs with our data lake, central data lake, that allows us to be able to get some specific data sets or data that is important if we deploy business intelligence tools to allow us to be able to do our supervisory work. So we've had integrations with many of the PSPs, DCPs, and that conversation is ongoing, including banks, to be able to see how we can complete that bit. But having that then allows us to be able to, for example, do a lot of the things that required us to be able to do through on-site inspection activities. Now we probably don't need to do any more on-site inspections, just through off-site surveillance, looking at the data and trying to make sure that, drawing some specific trends and whatever, we're able to actually do our off-site surveillance and be able, at the comfort of our desks, be able to regulate our licensees by looking at certain parameters and certain areas to be able to see whether they're in breach or not. And that's because of technology that we're not able to do that. And increasingly becomes more useful the more numbers of licensees we license. We don't need to be able to double our headcount to be able to achieve that. With the use of technology, we still are able to be very effective with the same number of resources because we're using all these tools to be able to do that, to be able to do the surveillance and the reporting and the monitoring of key compliance aspects that we look out for. But also, I think one of the key things that we're working on, especially in the payment space, is to try and see how can we automate our licensing process. Right now, it's very paper heavy. People deliver files in boxes. that meet as demanded based on the requirements that we set out. But we're trying to ask ourselves, there must be a better way in which we can actually be able to automate this process by allowing that the applicant to have visibility of the whole process and be able to track where the application is, and they can clearly see what progress they've made. If there is any missing documentation, then it's very, very transparent for them. And I think that then creates the kind of transparency and visibility, not only for applicants but for ourselves, to be able to say how fast do we ensure that anybody who comes to CBK to seek a license, there's a turnaround time assigned to the application, and we're able to see that end to end. And I think that's very important. You talk about issues of sandbox, whether we have one at CBK, not yet. Are we going to have one? Maybe. I think we will have to get the internal direction as to whether we will have one. And once that is cleared by our bosses, then we will be able to deploy one. But I think for now, not yet. But something that I know we've gotten a lot of feedback as to whether we need to have one, and I think we are open to that.
Right. I think on behalf of founders and stakeholders, I would like to say that we are looking forward to automation of processes, if not saying we are impatiently waiting for the processes to be automated. Yeah, so I will come to the audience in a bit. I have one last question to the panel, to the audience, and then now we can have the parting shots. Agnes, telecommunications. What opportunities are available and reforms are available where policies is concerned in telecommunications, in line with the future of where telecommunications is headed?
Okay, so this is a question my boss asks me all the time. He said, well, I am not a soothsayer, but I need to be able to look into a crystal ball and see where the opportunities lie. I think the opportunities are there and they are limitless. I may not be able to sit here and outline and say this is one area there's an opportunity and another and another. But I think the move by the CS Ministry of Information Communication made the right move to put in place a task force to look at the entire policy landscape in the sector. Because we have seen things coming up out of tech, out of telecommunications. We don't even know where exactly the borders are. There is convergence of technologies, there's convergence of services. There is a lot of things that are happening within the tech space that are relying on the telecoms infrastructure or the telecom services. So there is a lot of, it's a mishmash of things, and I think there exactly is where we see what opportunities are there. We don't know what is going to come out of that box tomorrow, but we are rest assured that they are good things. And so in terms of policy, what do we do? Do we continue operating with the policies that we've had? We recently got the policy reviewed and passed in 2020. But then from 2020 to now, we can all bear witness that there have been a lot of movement within the ICT space. And so there is need for us to look at where are the areas where we are struggling with policies. Is it issue of resources that the tech industry is relying on, and how do we open that up? Is it the human resource? Is it the infrastructural resources? Is it the governance structures that we have around the industry that are constraining or are constrained to execute their mandate, so that we open that up? And I think if we look at it that broadly, then we'll move in the right direction. So right now there are various work streams that the CS, once he inaugurated this sector working group, the various work streams that have been put in place to look at everything around the telecoms and the tech space, because you cannot speak of one without the other. They're actually moving together. Another thing I think that poses an opportunity is regional integration. We've increasingly seen that these services are now transcending borders. We're not only talking about providing services. Here, you go, we have customers who go to other places and they're like, can I do my payments, my M-Pesa payments? Can I do this and that, from here? And we are getting into collaborations with players across borders. We are getting requests from players outside of Kenya asking for collaboration. We are collaborating with the big wigs like, the Metas. They are the real big boys in this, and we are collaborating with them on a couple of issues. So, because our services are now becoming borderless, we also need to think of our policies and our regulatory landscape in that same regard. There's a big push by the EAC, to open up the borders in terms of even voice calls. Why is it that it's expensive for me to call Tanzania as opposed to me calling Europe? There are all these groups that are looking at that and wondering how do we open this up, and we find that it's because of maybe the taxation regimes in each of these countries or the licensing regimes that they have in their respective countries that make it unaffordable for people to be able to communicate easily when they are next door neighbors. And so I think integration is also, regional integration of policies is also something to look out for.
All right, so we can only look forward to better and more seamless.
Yes.
All right.
Certainly. The future is bright and exciting.
As always.
Yeah.
Yes. So Sarah, I've been seeing that some jurisdictions are trying to tighten the virtual world economy. There are some who are actually speaking of regulating the virtual world economy, in which Meta is a big player. What are your opinions? What do you think about that?
Again, I will go back to the fact that Meta is not anti-regulation. Meta advocates for regulation that does not stifle, regulation that promotes innovation, regulation that will take into consideration the nature of how the internet is, how people, the free flow of information. So sort of like a liberal, democratic kind of internet is what we advocate for. So as we move to our dream desire of the metaverse that we believe is the future, a lot is happening in augmented reality. We talk about AR, VR, XR. Some of those concerns still around privacy setting, they will not go away. It doesn't mean that because we're in a virtual space, people can still it's the same way we've always had the argument of people feeling that the people online are not the people offline. Like, I don't know how to explain. Like, your behavior online is not should not be thought of as your behavior offline, And even as we had a whole internal debate where people say the real world, but we are beginning to argue that even online is the real world. So if you do any kind of, we call them bad actors online. It's the same way you'll be breaking the rules on the road, you skip a light and all that. So it's the same things that we believe we will be faced with, and we are still faced with similar questions around what about safety, what about data protection, what about privacy. And these are all things that we're trying to figure out generally together. We have, as I said before, the standards and the things we stand for around the same, the core principles and values is what we hope that transcends into that new discussion. But again, back to the arguments around, as we think about that kind of regulation and as things are ever evolving, we have to think about flexibility to allow innovation to happen. You mentioned the issue around even sandboxing, for instance. We promote those kind of approaches because we believe, let us test, let innovators, let founders come, let us test the product, let us see what regulation would respond to new regulation before, as opposed to trying to regulate before the innovation has even reached the next stage. So anti-stifling, allowing people to innovate, create, is what we advocate for and believe in the same way as a virtual, I would say virtual economy, because eventually we are getting there. Yeah.
All right, so more of a hen that is put in a box, but then with enough space to think on its own instead of, because you see, with the regulations, with you reporting and being told these must be implemented, it limits what you can do. But from what you're saying is have more room, yes, regulations, but have more room.
Yeah, but we have to have the flexibility element of it all. Again, I mean, if I go deeper, some of the other things is around, we want some level of certainty, you know, to be able to know, like taxation is one problematic area. In recent times I've seen, at least now there's a whole discussion on a tax policy that's going to give direction for a longer period of time. Before that, we have to grapple with every year, you're waiting for new tax rules. They shift this way, they shift that way, they shift this way, they shift. So it makes it harder for you to even plan for business and all that. So when we think about, as in there's a lot of factors as a typical business, but in the nature of tech business and innovation, I think there's a lot more creativity when you think about regulation that allows for growth development as opposed to trying to punitive and control.
I agree with you.
Yeah.
Fantastic. To our audience, the floor is now yours. Go crazy, but not too crazy.
Thank you very much.
If we have any questions in the audience, please. Yes, sir. We have the microphone at the front. Okay.
Hi. Let me just stand up. Thank you for the insightful panelists and for sharing your experiences. I have a question to Mr. Michael Aganza.
I expected it.
Yeah.
That's okay.
I thought so. I just sort of want to get your perspective. Sorry, by way of introduction, my name is Caroline with the Compliance Department in NALA. NALA, yeah. There's a comment you made around collaboration and how the central bank is trying to encourage founders to collaborate more as opposed to coming up with their own products and to sort of leverage on their strengths. Something that, and I'm asking this with a bias to compliance, something that is increasingly coming up is, in terms of, in the context of collaboration and partnerships, is the exposure from the compliance side, especially now that you're leveraging on a partner or on a fellow founder. I know there's a context about doing your due diligence before you sort of onboard them, but the context of exposure, especially because of say bits like API and the cybersecurity aspect on that side, but also something really key. When you're bringing on board or in the context of wanting to collaborate more, how then do you maintain product uniqueness? Because yes, there are a lot of players in the market, and you do want to collaborate. But if you're relying on a partner's technology to then sort of in the context of integration, how then, because their failure in context affects your brand reputation in the market. So especially if you're coming up with a new product, then relying on a partnership or on a collaboration, seemingly with an existing platform or an existing player, then means that you're tagged sort of in the context of reputation. So the reliability of whatever technology they have in place can easily compromise your perception in the market, especially for new founders and new products. How then is the balance there? Yes, you want to encourage collaboration, but you don't want to stifle this new product that is coming into market. And how is the CBK addressing that within the context of collaboration? Second question, and I'm sorry I'm hogging the mic. Second question, what is the CBK's perspective, or what challenges do you see with new applicants, right? So I know you've mentioned about some of the gaps that you sort of send licenses back and say, give us this and give us that. But would you consider having a more holistic engagement with partners, especially when you're trying to do either policy reviews or even create sandboxes, similar to what the Capital Markets Authority did when they were creating the CMA sandbox? And I'm asking this with a slight bias. CBK tends to be, banker friendly. And to that extent, then founders don't exactly have the financial muscle that people in banking and some of your banking stakeholders do have. So how do you create a balance between, promoting innovation, but also realizing that the capital required to set up some of these things is quite intensive? How then can you create a sort of framework where they can meet, quote unquote, bare minimums, as you sort of supervise them to keep developing, addressing, of course, the main principles around market discipline? Thank you.
All right. Would you want to take that one, or we'll just get all the questions
Okay,
from
fine.
the audience?
So that I don't forget,
Yeah.
because I wasn't writing them down. So I'll try and let's start with the first one around what do we see and why we've never been in favor of sandboxes. I think something like that. So I'll talk in terms of what I see in my space. So far we have around 200 plus applications in progress, okay, of people trying to seek licenses as payment, to provide payment services. Okay. Now, and I say a lot of those vary from size, where you have just people out of college who think that they have an idea, to very established international players that come properly backed by their own parent companies in terms of trying to offer solutions in this space. Now, the biggest challenge that we see is that people don't follow the law. The regulations are very clear in terms of what exactly you need to be able to meet, what kind of documentation you need to be able to provide. A lot of the applications we get are incomplete. Incomplete in terms of documentations, but also incomplete in terms of not meeting the minimum requirements. And part of what we've seen, the challenge, and I'll talk to that, comparing that and the issue of the sandbox, and why it's always been a challenge. And maybe someone can argue it's an approach, or is it an issue of opinion, is that we find that the way the law currently has been structured is that it doesn't distinguish between a two-person entity with paper that wants to set up an office in Kenya. The requirements, the minimum requirements that everybody is subjected to are the same. So you find that when I subject the same level of governance that is defined in regulation to a startup fintech, it becomes almost too onerous for them to be able to meet. And when I, for example, demand that they have to meet certain cyber security standards, means that they have to deploy some level of investments into their infrastructure to be able to support that. That becomes too onerous, that many of them are not able to meet because of the level of capital deployment that is required to be able to do that. Now, the law, the way it is crafted, doesn't give me the power to exempt anyone. You either meet the requirement or you don't meet the requirement. Now, because of that, we see a lot of people are unable to meet the requirements when they are put through the scrutiny, especially the smaller startups. Now, does that mean that's the end of them? I don't think it is, and that's why we are talking about the issue of how do we ensure that collaboration. And also, what we've seen, which is a practical thing, all those ones who came through and have been licensed, there's always a challenge in scaling up. Yeah? A huge challenge. All of a sudden you realize it is not as easy as I thought. running an entity is not just about the product or the solution. I need to have a governance structure in place. I need to have my compliance working. I need to have my system guys working. All those things have to work together for you to be able to deliver a successful solution. Now, the reality of that, I need to be able to have someone doing the legwork to be able to get the customer. Now, all those things, when they come to play, you realize a lot of startups had not anticipated that kind of and that magnitude of effort that is required to actually run a successfully regulated business. Because with regulation, unfortunately, comes with some element of minimum costs that I need a compliance officer. I need an MLRO. So why do I need an MLRO? It's because the law demands you need an MLRO. So all of a sudden, you can never be a two-person institution. You have to, you have to scale, you have to deploy more resources, get in more capacity. So it becomes very, very challenging. And that's why we keep on arguing and saying that. So when we look at the paperwork, it becomes challenging. And part of why we're basically saying, can you collaborate? I know there's probably NALA. NALA is much more established in, let's say, money remittance. They've done it before. You have a solution. Can you partner with NALA? The key thing that we insist around partnership, and that becomes very important, is that for you to partner, you have to partner with a licensed entity as a minimum, because it provides you some level of safeguards that I just don't walk out there and partner with anybody, because that license kind of gives you some minimum assurance that this person is of a certain caliber from a regulation perspective. Okay? So those protections you seek in terms of are their systems right? The fact that they have a license, at least you can be sure that the CBK checks to make sure that they have a proper functioning BCP, they have this, they have that, their cyber security defenses meet the minimum standards, etc., 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 etc. So it gives you some safeguards to be able to say, it is easy for me to seek out a licensed partner, a licensed entity to partner with, because it comes with some safeguards. Okay? And that's why we keep on encouraging and saying, only partner with licensed entities. Yeah? And you can't say there's an unlicensed entity and a licensed entity, because the law doesn't provide for an unlicensed entity to provide the financial services that we provide. So if you are not licensed, you can do it, but you can do it through a licensed partner, through a partnership. I think what lacks, and what I see a lot of the people I interact with, who I send to any of the licensed entities, to say, how can I guarantee that, one, the issue of intellectual property, that he won't take my idea and run away with it. Yeah? And what revenue share, okay, fine, he has agreed, but they are squeezing me on the revenue share. All of a sudden, they want 20, they want to 80-20, they want to take 80 and give me 20. I don't think that's fair. Can you intervene? So that collaboration framework is probably what I keep on throwing it back to the industry, because it comes back to commercial agreements, is how then do we ensure you as industry players have a proper framework in which you can collaborate that ensures everybody wins. Because if everybody wins, then everything moves forward. And I think that's very important. We talk about platforms and things like that. How do I ensure that the vulnerability that you assume when you partner, or the liability you assume when you partner? I think the only assurance I can give you is that if you're partnering with a licensed entity, then I think the safeguards are much, much better, because at least you can rest assured that that person is being subjected to some oversight, and there's some minimum expectations that the regulator expects that they have to comply, and that is happening. And if it doesn't happen, then there are some recourse that can be taken from an enforcement perspective, but also you have a recourse in terms of raising a complaint with the regulator to intervene on your behalf. But you can't do that when you're dealing with an unlicensed entity. So I think in a nutshell, that's how I'll respond to that. I don't know if I've missed out anything. Yes, this is right. In terms of stakeholder engagement, stakeholder from an applicant perspective or from?
From an applicant perspective, in the context of how you price.
In terms of, sorry, I can't hear.
Use the microphone, thank you.
Stakeholder engagement in the context of policy formulation, right? Because there's a tendency to lean more on the banking side, just because, of course.
Not really, not really,
yeah.
not really.
So,
we do, and maybe the only feedback I can take back is that, for example, right now we've just started the process of reviewing the national payments law review. Okay. Now, the engagement and people who are involved is very cross-cutting. We have fintechs, we have, not fintechs, licensed fintechs, let me qualify that. Because also we don't like engaging with unlicensed parties. Maybe if that's the case, then we stand guilty. But so long as they're licensed, we try and make sure that the people we engage with is representative in terms of the profile of licensees we have, who perform and offer the same services. So if it's payments, banks are represented, and even from the banks, the top tier, the middle tier, and the small tier, you have the fintechs, or the PSPs in this particular case, the ones that offer various services, money remittance, payment services, the ones that have wallets, etc., the switches. So we try and make sure that it's as diverse as possible, because then that allows us to be able to do that. Is there room for improvement? I think there is. And maybe that's probably what we need to be able to focus on, is to say how then do we map out our stakeholders to make sure that that list is as updated as possible, so that when we are engaging or are about to take a policy decision, we're not leaving out anybody. And probably that's a feedback I can try and take and see how do we ensure that we've mapped out our stakeholders as comprehensive as possible, so that we don't leave out anybody's input, and it's as representative as possible.
All right, I think we had one question here.
Yeah.
Yes.
Another question for you, Mr. Uganza. Sorry.
Okay.
So, as you know, Caroline is my colleague. I'm the group COO at Nala, based here in Kenya full-time, with our team of 50 people. So we have two parts of our business. We have the money remittances business, which we're known for, and then in certain markets, PSP activities as well. So we have a PSP license in Rwanda, in Tanzania. We're getting licensed in Uganda as well. We have a money remittance license there. Looking at the money remittance product, if we talk to our customers, they care about two things. They care first and foremost about price, and they also care about reliability. Actually, I'll switch that around. They care first and foremost about reliability. If they're sending money to somebody who's in the hospital, they need to make sure that money is actually there and it's showing up. And as a result, as we got into this space 5 years ago, we've had to build many different connections and many different partnerships. So that's how we scaled originally. We have probably 50 partnerships across Africa, and in Kenya, a handful as well with licensed institutions. Now, to the point that Caroline made as well, we find that a lot of times there's a lot of room for improvement as it relates to operations and as it relates to technology. And that's why we have to partner with so many different folk to route transactions according to how success rates are, etc. So, I think the CBK does a great job of regulating as it relates to governance, ensuring AML, CTF, adherence to KYB, KYC, etc. What are your thoughts in terms of the CBK's responsibility at looking at the quality of product of its existing licensed holders?
So, I think CBK's role in approving product is very central. So my expectation is that any product that a licensed entity offers to the market has to be approved by CBK. And in approving products, and I'll give you an example, products that that I approve, which are mainly payments products, that are approved by my department, are subjected to a very rigorous test. Yeah. So with the launch of our payment strategy, so we have principles which we try and see, does that payment meet that principle? So security is one of them. So how secure is it? Secure can be from a point at which it's a delivery platform, can be the product in itself in terms of utilization, in the sense that are you mis-selling? Are you putting out there the right information from the TNC all the way to what the product is intended to solve? So we look at that. We look at the issues of around trust. Trust more around what you talk about, guaranteeing that the reliability of the product, and if you actually are saying that you're going to deliver it, you have the systems and the processes to allow you to be able to deliver it. So we do subject any product that we receive for approval through that process, and it's only after it has met that process that we grant an approval for it to be used. And you can't operate a product that has not been approved by CBK. Otherwise, then it attracts a compliance breach and it attracts an enforcement action. So those are some of the safeguards we've tried to make sure that there's no product or service that is offered in the market without approval. And the reason why we'll have a second look at it is around that bigger public good principle, to try and say, is it serving the public in the right way? And just purely from a market discipline perspective, are you adhering to the rules? And many a times the rules are usually spelled out and they're known to everybody. So we're just trying to cross-check whether you're actually playing by the rules. And that framework does exist. Is it always followed? I think it is. Occasionally you'll have excitement where you see product launches that haven't been approved by, and that's the problem mainly from the licensees. But we have a way of catching up and making sure that they follow the rules.
In the interest of time, anyone with a burning question? It must be burning. All right then, I will have our panelists give us our final shots and then we close down. If we were to frame your words, what would be your parting shot?
Are we starting with me?
Yes. Unfortunately, you're sitting on the last one just directly opposite me.
Okay. I don't have a word, but I have a paragraph as a parting.
Fair enough, it can fit in frames.
Yes. And I know as industry, we are very keen on what we call light touch regulation. And light touch regulation is what allows the market to evolve, thrive, and regulate itself. I know there is a big fear of the unknown. The consumer protection enthusiasts in us will want to know what happens to the customer when this happens to them, when this doesn't happen for them. What are you going to do with their data, etc.? And I think as a country, we've done fairly well. We have those areas well covered, and it is high time we can actually adopt light touch regulation, let the markets evolve and thrive. We have very good regulators in place with the mechanisms to allow them to step in case we observe that something is not going in the right direction.
Thank you. Mr. Ganzo.
I think for me it's just, my parting shot is, I think the rules are known, let's follow the rules.
Wow.
Yeah, it's a regulator.
It is, exactly. Ms. Sarah?
I would say the whole stakeholder approach, participation of industry in a lot of these discussions, the innovators from the founders who are sitting in this room, I think regulations cannot be made in the absence of all these people. So when, you know, I'm sitting next to a regulator, but I'll still say industry-led discussions in terms of regulation always ends up in a good place. So that would be my parting shot.
All right, thank you. Thank you so much for gracing us with your presence and your wisdom. We appreciate a lot. My parting shot would be regulations and policies are here to stay. They must be implemented. You can start off, but they will catch up with you. So why damage control when you can prevent? Thank you for having us.
Thank you.
Thank you very much. Another round of applause for these panelists. Asante sana. Thank you so much, Evelyn Gashoki, for moderating that discussion. Asanteni sana for your very well considered opinions on that matter. Ladies and gentlemen, wow, quite a heavy discussion there on matters regulation and policy. Yes? If we could just go through some of the highlights, some that I'm sure you got some more. But on this issue of collaboration or concerns over collaboration vis-a-vis protection of intellectual property, I'm sure most of you would be concerned about that, especially for new innovators who are looking to get into this market or collaborate. Given the kind of policy constraints that you will encounter, issues like KRA and licensing and all that, and the CBK, the gentleman from CBK was very keen to point those out, because the law, unfortunately, does not favor anyone. The law cuts across. Regulation answering questions of trust between customers and service providers. Yes. Why it may not be feasible or possible for regulators to proactively anticipate innovations and develop corresponding regulations. I think that's pretty obvious. Innovation moves very fast and you can't keep up sometimes. Issues around globalization of some of these services and the challenges that exist in collaboration and integrating policies across borders. Interesting issues. And also regulating the virtual world economy, and I was hoping that I would get a lot of questions on that, especially because it's an emerging phenomenon and there's so many questions that are yet to be answered. Okay, but we'll continue having this discussion, so if you have a question, we can just postpone it to another session, including tomorrow or on Wednesday. Remember, it's a 3-day event, and we'll continue with this. And you realize that all the conversations do tie in at the end. One is related to another, so they just basically overlap. Thank you so much, Evelyn Gashoki, once again, and your panelists for that discussion. Ladies and gentlemen, we now want to move to the final discussion of the day, and this one is on remittance marking the sport. Yes? It's going to follow the same fashion. So allow me to introduce the moderator for this session, Sharon Kenyanjui. Sharon, karibu sana to the stage. A round of applause for Sharon. Sharon is a founder, Diaspora Bridges Advisory. She's a highly respected global leader in the remittance and fintech industry, having successfully organically grown World Remit from strength to strength on the African continent over the past 5 years, and also propelled Western Union's growth across UK, Ireland, and Nordics for over a decade. It's a pleasure to meet you. Karibu sana. Sharon has extensive experience in the payments sector with over 15 years worth of expertise in development and implementing successful international business development plans. Her knowledge and experience in remittances dates back to her management roles in business development and marketing at EMEA at Western Union, and prior to joining World Remit in 2017, she has board experience, having sat on 5+ boards at World Remit. Sharon is a principal consultant at Diaspora Bridges Advisory, a strategic advisory firm providing payment support to corporations, investors, governments, and non-profit organizations in Africa, including Pula, a leading agri-insure-tech who DBA supported to make digitized mobile and airtime payments to contractors across 9 countries in Africa and Asia. So we're in very good hands for this conversation on matters remittance. So, ladies and gentlemen, let's hand it over now to Sharon Kinyanjui to invite your panelists and take over this discussion. Karibu sana.
Thank you so much. Hopefully you can hear me clearly. Wave your hand if you can hear me. Fantastic. Okay, just checking because this is the last panel of the day. So we're going to try and make it a very robust and energetic one. So I'd like to ask my panelists to actually come up. I'll start with Nikolai Eddy. Nikolai Eddy is the CEO of NALA. Nikolai? Thank you, Nikolai. Make yourself comfortable. Fantastic. I'll also ask Naima Yusuf Abdi. Naima is the Senior Product Manager, Universal Payments M-Pesa at Safaricom. Naima? Great, and to add to the last panelist, that's Andrew Kabeke. Andrew is the General Manager, International Banking and Payments at Equity Bank. Andrew? Karibu. So like I shared, I'm very excited to have this panelist of great experience who are sitting here with us today. It's the last panel of the day. They're going to bring in a lot of energy, I know, and a lot of experience, and they'll really add to a robust discussion. So to kick start off, let's start off with some introductions. I'll probably start with Naima. If you could showcase and share your name, and also your organization, and also why you're passionate about remittances. Thank you, Naima.
Thank you, Sharon. Good afternoon, everyone. Don't know if you can hear me. Yeah, much
Yes.
better. Yeah, so my name is Naima Yusuf. I work for Safaricom Limited in your M-Pesa division. But before then, I have 17 years experience in telecommunication in different sections, so from retail, special projects, and finally digital product management. I joined the remittance team probably 9 months ago, but we were still, when the discussions were happening, we were still more or less in the same team, but now I lead the team for both remittance and global payments. Why I'm passionate about remittance, I think I've had an interaction with remittance for over 22 years, from when my sister was in high school, when Western Union was the only one that was available at that particular point, and you had to get money and walk all the way to town, for those who remember the Kenyatta Avenue one, so it was brick and mortar, and then all the way to when I needed money, so then that's when the Hawalas, which is the Somali remittance organization, started coming in. And now, so the 3 generations, now my kids receive remittance through their phone, so they have no clue how remittance has transitioned. So you just sit at home, and the next thing you hear is tit tit, and you're like, oh, what's that? Oh, I've received money from who? From auntie. You're like, you're so lucky, you know. We had to ensure that you would go with lots of KYC and explanations and things like that. So yeah, I think one of the key things that probably I'm passionate about is seeing how it has transformed lives, right? From payment of school fees to ensuring basic needs have been met for those people who have actually traveled to the diaspora, who've gotten an opportunity to send money back home to better their families at home. I think that's why I'm very passionate to ensure that it actually is a working, functional product. Thank you, Sharon.
Thank you, Naima. Nico?
Sure. Good afternoon, everybody. It's nice to be here. Excited to have M-Pesa on the panel because I think there will be a lot of good, spicy dialogue together. So I'm Nikolai. I'm the COO at NALA. NALA is a B2B and a B2C payments company. We have a money remittance product that's live in the UK, 19 markets in Europe, as well as the USA, and we remit funds into 9 markets on the African continent, with 2 more to come later this year, early next year. So we're very excited about that. We also have a B2B product, which is facilitating payments for other remittance companies and other providers, which we hope to launch once we get licensed here in Kenya. And it's live in a few other markets where we do have our PSP licenses. So money remittances, I think why that is of interest. It's an area that I've become more familiar with over the past 8 years. And there's a few things that I'm passionate about. One is sort of what I mentioned before. One is around reliability, because you see the impact, and I get personal phone calls sometimes to my phone, or Benji, our CEO, gets messages directly when payments don't go through and somebody's in the hospital or somebody's waiting for school fees and payments are not there. I think that's one thing that I'm very passionate about trying to solve, is how can we drive further reliability so you don't have to question which app or which product should I use before I'm choosing what to pay out with. It should just be a universal commodity that works. Second thing that I'm very passionate about is cost and pricing. And I was looking at some stats, and I think it's close to 8%. The cost of transmitting funds into Kenya is close to 8% per annum. And there's many reasons for that. Some of them are on the stage with us today, and others are contributing to trying to reduce those costs. So no direct shots, but I want to keep things moving. So I think there's many reasons. In all seriousness, there's many reasons for why it's so expensive. Some have to do with collection costs, card costs. In Europe, UK, US, for where funds are originating from. Others have to do with banking fees that you have to pay in the middle. Others have to do with capital that you need in order to facilitate real-time transactions, so float. And then, of course, payout fees as well, the cost of terminating directly into a wallet for the individual who's using that. So I'm passionate about how do we reduce that? Money is a commodity. It should be free, right? Why are we paying 8% for people who are working really hard to send money back home to support their loved ones? Why are we paying 8%, to make that happen? So that's me.
Thank you, Nico. It's definitely going to be a spicy discussion, as you put it. Finally, Andrew.
Okay, good afternoon, everyone. I hope you can get me clearly. My name is Andrew Mutakabeke. I'm working with the Equity Group currently. Nikolai, thanks for the blues. We felt them. We'll throw some towards you, don't worry. It's interesting, Naima mentions the Western Union that used to be there at Kenyatta Avenue, because that's where I started my career as far as remittance is concerned, a couple of years ago, it's around 2003. And it's been an interesting journey through that, having engaged remittances from a parastatal perspective, fintechs, telco world, to the banking world. Recently at KCB, then at Equity. So it's quite interesting. And also having worked in private banks around remittances and seen the transition over time, including the point when the investor was actually being introduced in the country. And it's interesting that Nikolai says money is free, which is true. It is free and should be an easy commodity. The problem is always the access. Distribution is where the problem comes in. So for me, passion around remittances is having seen that growth, that revolution of how then you can send money to mid-instant today, and where we are going next. Then how do we resolve this for trade? Today and for the longest time, when you talk about remittances, what everyone thinks about is P2P. But where are the traders? I mean, how then do you facilitate that for trade across, particularly in Africa? And that's something that I'm very passionate about. And Equity then gives us that opportunity to be able to figure out how then do we take trade across Africa, and remittances is right in the middle of it. And I'm happy to be part of that. So looking forward to an interesting conversation. Yes, I know cost is one of the things that always comes up, but then just the question is how then do you dissect and ensure that the various players in that particular market also do benefit, because they also need to make money, including Nala himself, Nikolai here. You also need to make money to survive, right? But then how do you make it affordable? To 8% is quite high, to be honest. So it's going to be interesting, I believe. Yeah.
Fantastic. Thank you. Thanks a lot, Andrew. So I think everybody's talked a bit about the remittance industry, but to put it into context, I guess, for the greater audience, the World Bank estimates that the total industry is about $810 billion, so it's a huge industry. About 53 billion flows into sub-Saharan Africa, and then we know that in the Kenyan context, it's about $4.1 billion basically comes into Kenya, and it's the highest foreign direct investment inflows into Kenya. So outside of the horticulture, outside of tea and tourism, which we know very well, it's really remittances that bring in the inflows. So that's just setting a bit of context. But I also want to touch on something that Andrew discussed. And I'll start with Andrew and then move to the other panelists. We talked about, obviously, that there's P2P, which is where essentially people send peer-to-peer. There's also B2B. What is your view? What is the most underserved segment in remittances?
Okay, fantastic. Thanks a lot, Sharon, for that. The most underserved, like I've said, is what you call the MSMEs, right? That's the medium, small and medium enterprises. And the reason we say that they are most underserved is because, remember, for them to survive, there's a lot of transactions that happens, right? And like the bigger corporations where you can be able to bill once at the end of the month, then in between here, you find that the MSMEs then require to have a lot of transactions that happen. As far as remittance is concerned, then they become underserved. Some of their requirements is sending one to many or many to one, and that area is not really developed over time, right? So today, sending money is instant. Sending money from here to one of the countries that Nala sends to is instant. But now when it comes sending to a business, it's a problem. There's a lot of regulatory problems, a lot of documentation required, there's of course a lot of risk required, risk about it, but that has not been developed really to give it that instance and really give value to the MSMEs that it requires. So in my view, that is a world that is really underserved. Today, if I want to send tea, for example, to Egypt, I can be able to send, but receiving the payment is going to be a headache. So how do you make that better? If I want to buy, for example, handbags from Uganda and ensure that that is delivered instantly, then how do I resolve that? So that market really needs a lot of digitalization to get to the level where P2P is. In my view, that is one of the markets that really, really underserved.
No, I love that, especially as later on in the discussions, we'll also talk about intra-Africa trade. So I love the way that you're setting the stage for discussions further on. How about you, Nikolai?
Yeah.
What are your views? What's the most underserved segment for Nala? What are you trying to address?
Yeah, so the most underserved segment, I think it goes in varying levels of service. I think there's, clearly there's quite a few services that send money inbound, let's say into Kenya. Now the degree and the quality and the cost, reliability of those services vary quite, differently. And I'd say that there's a lot of room for improving just that segment by itself. Take, for example, purpose-driven remittances. This is, at our launch in the US, when we launched in the US, we had a large Tanzanian diaspora who joined us for the launch, and President Samia came to the launch with us, which was really exciting. And I was talking to one of the ladies there, and she said, I've been sending money home to build my family, retirement house, and I've been sending it to my brother for the past 2 years, and I recently just did a trip back, and I went up to Bagamoyo and I went to go see the plot of land, and I've been receiving photos, and it's it's looking like it's growing. They're sending it for whatever it might be. So I think there's a lot of room as we talk about quality of servicing. There's a lot of room to go deeper into the consumer segment, but I'd have to agree that I think the SME segment is there's so much opportunity in that space, especially with an increasingly global Kenya and an increasingly global Africa, with currency mismatches as well. More local currency than hard currency coming into the country. That leads to imbalances, which makes it difficult for importers to do trade outbound, and then they have to maybe show up to the bank and actually deliver documents. And so, things can get quite challenging there. So I think there's a massive opportunity in that space.
Fantastic. Naima, do you want to add anything here?
Yeah, maybe just some statistics to what Nico said and why I equally agree with him. I think 75% of remittance sent into the country is actually used for basic needs. So we are left with 25, and that 25 keeps growing. It's only that we've never given customers the opportunity to actually grow it. And then purpose-led remittances come into play. So what we call remittance with a purpose. So why exactly are you sending that money? Then if it's for school fees, why not send directly to the school? So then there's less misappropriation and people feel better sending money. But the reality of the thing is black tax has always been a millennial thing, right? So when you're being sent abroad, you definitely know you have to pay back why you were sent. So you were the only one in the village who got an opportunity. So the whole village came and took you out to the States. So definitely you have to pay back. But what I see in the future is, as the millennials get settled, their children, who are now the Gen Zs, will not follow that same suit. There are those people who ask you, but why should I send you money? You know, like, why do you need? So a lot of theirs is why, and that why we need to address. So why am I sending you money to buy a house? Okay, which house do you want to buy to? Can I purchase that house for you? Why are you sending money to buy a health insurance? Can I purchase for you that health insurance? So it becomes broader than black tax into having a need that you want to resolve. So the C2B element comes into play. The B2B obviously is great from a business perspective, and we know the numbers, but also how do we then make sure that then that transaction is also easy? I think that's what we haven't knocked, and I'm pretty happy when Equity announced there is now cross-border trade amongst their infrastructure, but then that's just one play. So they're doing it closed loop. How do we open up now and we do, right? So I think for me, that's the key thing that I'm seeing from an industry perspective is moving away from us. Remittance will definitely have to have a purpose going forward. Yeah.
I totally agree with everything that all three of you have spoken about. And one of the trends, I think you also spoke about it at the earlier stage, Naima, was obviously how you've also seen digitization happening. You know, you used to go and collect, or your family used to collect the money in a Western Union location, and then in the end, you know, your children are receiving it directly onto their phone, so they understand that digitization evolution. With that in mind, what role do you think the regulator has played in terms of evolving digitization? I wish we had kept Michael Iganza behind to join this part of the panel. But what role do you think that regulation has played in digitization?
I think for me that question is a bit biased, because if you look at the start of M-Pesa, they played a very key role in just ensuring we have this big monster that it has become now, that no one really understood. So from a regulatory perspective, I think we really need to work closely with them to ensure that the value propositions we're giving them, they actually, number one, first understand, and then number two, work with them in terms of ensuring how have you secured the environment. Because at the end of the day, what a regulator wants is the comfort that whatever it is you're taking out to the market is actually first, there is value to the customer and there is security for that same customer. So how I view a regulator is more from a partnership perspective, is how do we accelerate? Of course, at times you get frustrated because they don't move at the speed you move in, which is warranted for, but then how then, I've always questioned, how then as an industry can we bring them up to par with what we want to do? And to be honest, they have really been accommodating. Like now we are talking about Bitcoin and stablecoin. They already are forming a committee to discuss what this technology looks like, how do we ensure that we move forward. But if you look at what is happening in the industry and what has happened in the US, you find that yes, they went leaps, but now people have really lost lots of money, and others, unfortunately, have actually committed suicide because they've lost their pension into these schemes that have come up, and no one could be able to regulate it, right? So for me, I'm all for regulation, but how fast you move is now the question, because if we move slow the way we are moving, then it means what I needed 2 years ago is not what I need now. And I love the fact that Nala is here, because they've shown people that remittance can be accelerated, right? Because what we've been doing wasn't good enough. So all digital remittance players have now made sure that they've expanded what this small space used to be into an enormous one. And also you keep realizing that there's actually opportunity for everyone to play in this. Yeah.
No. And I'd like to give Nico, because that's a big shout out coming from coming from M-Pesa, maybe an opportunity to ride that wave, and maybe add any commentary on that.
Yeah. So just what, the role of the regulator and
the role of the regulator in digitization and growing the payment space.
So I've got sort of mixed feelings and experiences as it relates to regulation. I think on one hand, extremely important, especially as you talk about consumer protection. You know, businesses and companies that have good intent will do that themselves anyways. But you can't rely, in an open market, in a capitalistic society, you can't rely on the good intentions of, you know, an organization. So you need to have some frameworks in place to ensure that individuals who are using your services or who are involved in the services are actually benefiting from them. So I think regulation plays a critical role there. I think also important as it relates to like combating, global AML and CTF, so anti-money laundering and counter-terrorist financing initiatives. The regulator needs to ensure that they don't end up on some blacklist, which will then further prevent and make it more difficult to have foreign direct investment into the country, which in turn will lead to further currency destabilization, et cetera. So I think the regulator plays a very critical and crucial role, especially around those areas. Now, where I'd love to see the regulator evolve and move more quickly is really on understanding, especially these digital first players. Most of these digital first players are not coming just to Kenya. When they're offering a solution, they're offering a solution that is pan-region, pan-Africa, maybe global even, like Nala. And what makes it very, very challenging to operate is when we have to get licensed in every single market distinctly. So, some regions, like maybe the WEMU region or CIMAC region, where there's more cooperation between governments and you can operate, in one country and it gives you passporting rights to others. I'd love to see a similar model, start to develop, maybe East Africa or parts of East Africa, and then maybe, Southern Africa and some of the surrounding Botswana, Zimbabwe, et cetera. I'd love to see that because, ultimately, if you have more uniformity in terms of how you're regulating, institutions, and you make it easier to get through some of these barriers as opposed to just a tick box exercise across 54 countries, there will be faster innovation, and I think there's amazing things that can happen once technology is unleashed on these problems.
Yeah, thanks a lot. What are your views on that, Anna?
Okay, so without beating the point of what my colleagues have said, the regulator runs a very critical role to ensure that then they moderate what happens in the market. Like Nicholas said, not every company has got good intentions, right? And we have seen that globally, where there are different kind of companies that can come and survive through. Others in the middle die because of either corny people, whatever it is they're doing. And that happens a lot. But again, also, the regulator has a role to be a leader. So one of the things, yes, M-Pesa did, having worked in various, like I mentioned, fintechs and various telcos, then what you discover is you try to create a product, you can see the problem, you want to run to the market, but then again, the regulator does not understand what is happening. And so because of lack of understanding, one of the fintechs that comes up then helps them understand. So the regulator, as much as they're a facilitator, they play a critical role, they're a leader, they also need to take time to understand what is actually happening in the market. If you pick some countries, for example, where you have blockchain, forget the currency itself, but the blockchain technology is being used very well. Some of the countries we have, for example, if you go to the UAE, Saudi, they're using blockchain quite well to facilitate a number of banking transactions, a number of customer experiences that are quite well. But what happens in here, for example, you find that they're not willing to listen about blockchain at all. But again, today in the papers, you read that they want to start taxing crypto. So then the question lies, where really do you lie as a regulator? And that is just an example of some of the double standards. So even when it comes to remittances, for example, you find that what Nala is doing today, just an example, Nikolai, Nala is getting a license, but someone else, Andrew somewhere, does not get a license of something similar. And probably it's just more of the regulator didn't take time to understand what does the market require, what are these people offering. So they're critical. There can be a leader, a market like Kenya, then whatever Kenya then picks up and authorizes, then you find that the other regions pick up. But at the same time, it's also your responsibility to learn what actually does that fintech want to do. And there's always be more coming up. So I think they play a critical role, but sometimes they can be, like Naima said, they can take time to actually authorize some of the transactions you require, and that takes, again, it becomes painful. So that that needs to also to be checked into. Also the regulator also plays a role to try and give a level playing field, so to speak. So that then it means that if all of us have to go to the regulator, then it means that all of us end up playing on the same play field or the level. But that does not actually happen. You find that some partners or some banks or some telcos, and I know when you say some telcos, everyone thinks about Safaricom. I want to know about Safaricom here. Let's say in some telcos, actually in the market generally, around East Africa, then would get more of punitive punishment or get better kind of, preferential rates or preferential treatment. So the regulator then needs really to play that role of being the level playing field for everyone.
Yeah, and that makes a lot of sense. I want to pick on something that you talked about, which was obviously that quite often regulation probably comes after the horse has bolted, right? The innovation's already in the market, and then the regulator comes into play to kind of, like you say, level out the market at a later stage. I'm thinking about, obviously, things like AI and machine learning, and trying to wonder, is it something that you guys have considered within your organizations? We know that obviously that is the hot topic at the moment, or the emerging trend. Do you think that it's harmful, or could it potentially help the remittance industry and how you serve your customers? I'll leave it as an open. Whoever wants to jump in.
Okay, I can jump in and start on that.
Yeah.
Personally, I think AI and machine learning are actually very good to have. Like any other thing, like any coin, there's a positive and negative to it. There is that. But I think it is. And I'll give a practical example. So let's look at remittances today. If we all know the limits for today, the regulator is $10,000 equivalent. There's discussion for $15,000, but that's an example. So what happens is, if I send money that is more than that, and this is just a practical example of how we can use it, then it means that the money, as a customer, the bank has to contact the customer and go like, Sharon, did you send money? Why? Give us proof and everything else. So how can AI come in? Is basically learning your trends and your behaviors, that then that customer experience can actually be improved a lot, right? So I think then we come to help. Understanding, because what AI does then is understanding what happens, the status quo, what has been happening around the market, then trying to put all that logic together to help, can actually improve the customer experience greatly, very much. So you can find someone like Nala, for example. If I use Nala to send money every time, it can even get to a point where it reminds me. The AI itself reminds me, the machine learning reminds me. It's just like examples of what I would think then would happen, and reminds you that you need now to transfer money for a purpose, or you need to pay. So they are good to have, but like any other thing, technology also, the question is to what level do you get to the technology level? So anyone then trying to pick up that needs to be very careful around then how do you ensure that it does not bring out the negative side of it, because that does exist. And it's a risk that is there, and you have to face it. But there are very many, opportunities that you can actually use for AI and machine learning. I just thought that question is better answered with a practical example.
Yeah. I love that example.
Yeah. I can give two examples of how we use it. I think, well, one, it's about, AI, let's acknowledge AI, ML, it's a big buzzword these days. If you have that somehow in your company name, your valuation's automatically going to increase, right? So let's not overlook that fact. But I do think that there are a couple of very practical examples of where it could be used and where we use it today. So we have somebody in the audience today, Shamte, Mr. Shamte, who's leading operations and support.
Yeah.
And we have, when somebody has an issue in our product, they reach out in the app and they say, hey, we've got this problem, or what's going on with this, or how do I do that? Now, we have real individuals who are responding to those queries, but sometimes questions can go overnight. So you don't have a resolved query. Maybe there's a payment delay, or there's a KYC issue and there's a delay. So what we can do is we have the ability essentially to query and say, hey, give me a summary of this conversation thread. So if there's a new analyst who's coming in and customer support agent who's looking at that issue, it can, in like a matter of seconds, go through all of the past history of the conversation and summarize it in 2 to 3 bullet points, so the analyst knows exactly how to take it up. So that, imagine now you're adding like another minute and a half because you have to go through the conversation history. That reduces that response time. So I think that's a practical example of like, this is where, there's a great application for it. Another is as it relates to fraud. So understanding patterns, and these are of course, there's some recognizable patterns that we all know. Like somebody tries to send, like 99999. They're trying to test the limits to see, okay, what is the limit of your system? So there's those obvious ones, but then there's a bunch of unobvious, and fraudsters, I'll say, startups, like fraudsters are always leading the charge in terms of innovation. True. Then come the startups, then come the corporates, and then come the regulators. So how do the startups get in front of the fraudsters? Well, machine learning can be another application of that. Although it's important to note, you have to ensure that there's no negative biases that somehow develop, and then real customers, are not getting biased against for whatever reason or somehow. So it's important to have some level of controls in place as you're employing, new technology in your organization.
Naima, do you agree that corporates are here, or when it comes to the fraud equation, or are you also using machine learning and AI to combat fraud? Because I'm sure that's a very big element because of the size of M-Pesa.
Yeah, and I think when it happens to fraud, I think we are always hit first before anyone else. Just in terms of even how they change their stories in terms of fraud. But maybe just to speak on AI, and I was going to agree with Nico, is especially from a fraud perspective, that is a very key thing that we need to implement. So one of the key things that also we've implemented is real-time settlement, or real-time screening, is knowing this person, and when they keep doing this pattern, then when they go off pattern, there's something wrong. Implemented things to counter that. That's where AI needs to take us to, right? So those are some of the, but for this to happen, of course, we have to have an industry collaboration. You can't do it on your own. There's no way you can resolve an issue. And once we do that, then remittance becomes so open, because the limits now stop becoming an issue because you've secured your place, right? But then also, in terms of any technology, there's equally the downside where, of course, you're going to get people who are going to abuse this. One of the key things is, I know there is someone who was defrauded. It was the voice of the son, the voice of the lawyer. So it's like they knew the whole pattern and they knew how to get money out of him, and they eventually did get money out of him. So when he was taking it to the Supreme Court in the US, everything was real. So the voice was real. So who do you prosecute? So those are some of the things that, yes, it's a good thing, but we need to still learn, but within the context of industry. I think from an industry level, we need to talk. We need to talk more often. We need to collaborate more often. Then resolve these issues that affect everyone and not just specifically to a specific segment here.
Okay. Now, this is a moderator's dream. Huh? So basically being able to have the creme de la creme of telco, bank, and fintech all on the same platform. So I'm living a dream. But I also want to touch on something that Naima, you talked about, which is basically about how the industry works. So when you look at the three entities or three types of organizations, friend or foe? Andrew, is this a friend or foe relationship that you guys have?
The simple answer is a friend.
Okay.
Right? And like any other friendship that has, there'll be a few points where there'll be a little bit of clashing. And the way they look at it is it's actually iron sharpening iron, right? So we might look in competition because at the end of the day, you still have to make money for your organization. However, that communication, like Naima is saying, you can be rest assured that the conversations happen. I know I spoke to Naima just as late as Friday, right? Nicola, I might not have spoken to him this week, but my team speaks to him probably even as late as today. So that conversation still goes on, and we are aware that, for example, that Nicola Nala is in bed with Safaricom. Safaricom knows Nala is in bed with Equity. At the same time, Nala knows that Equity is in bed with Safaricom. So it's more of it's a friendship situation. However, sometimes those clashes do occur. And those clashes are normal in business. The only thing we have to realize is, for us really to be able to survive in this market, we can't see each other as a foe. And I stand corrected, but you can't see each other as a foe, because the moment you do that, then that becomes a problem immediately. Yeah.
Maybe as I take the question to you, Nikolai, maybe one thing I'd like to add is looking at whether it's friend or foe, and do you see opportunities for collaboration building on what Andrew has talked about?
Yeah. So what, my two counterparts, friend or foe?
Yeah, friend or foe.
Well, personally friends, of course, but maybe there's, I just looked this up. Frenemy, is that, can you say that?
That's a word.
No, I think at the end of the day, there is no Nala if there's no partnerships. Because, one fintech, especially a fintech, starting out, they can't do everything themselves. And so you need each other in order to survive. And so, yeah, like when I mentioned earlier, we have probably 50 partnerships all across the continent. If those partners weren't there, there would also be probably no Nala in all of those markets. So I think it's extremely important to work collaboratively together. Although I also think, in the spirit of capitalism, everybody wants to maximize their share. So maybe that's another area for regulators to think more about as the greater good as it relates to profit sharing, et cetera, and how are we actually driving value to individuals, to consumers in each of these markets by ensuring that when partnerships do take place, they're done in such a way that doesn't actually end up hurting the end customer along the way.
Naima, last but not least, are these
Yeah.
guys your friends or should we just push them off the stage?
You're afraid of what she'll say.
Personally, push them off the stage. Representatively, no. I think Safaricom started as a two-sided network where we had the consumers and the merchants. But then as we continued growing, then we evolved and we had now the ecosystem play, which is now three-sided, and we've included our partners in it. So one thing we look at is you can never succeed or go where you want to go without partnership, and I agree with Nico. There's no way. We can never have built this ecosystem if it wasn't built on people who are more innovative than ourselves to actually come up with solutions that need to be resolved, right? So that is how we've always been done. And opening up our API on Daraja was one of the key examples of guys come, we collaborate. Away from that, in remittance, I know I power his rails, and he powers his rails. So we are all, like he said, in bed together. Yes, so it is quite important as an ecosystem to just play that part, but also it is good to realize that each organization at the end of the day has its objective. And for us, one of the key things that we purposely look forward to is fulfilling our purpose of transforming lives. And if it can be done through partnership, which has to be done through partnership, then that's what we will go for. And that's what we have built. And going forward, that's how you'll see Safaricom position itself. Purposely is from an ecosystem perspective, is how do we build this. And one of the key things that we've done, especially from an M-Pesa Africa perspective, is we built one hub. So if it's IMT, we have one IMT hub. What does that mean? You connect to Kenya, you can connect to all the other markets at the same instance. So we've stopped being very fragmented. And then also the other thing to ensure that innovation is there, we've started the Spark Fund for young innovators. So we are collaborating with them to be able to build and solve. So what we do realize is you can never solve everything. There is somebody who's thinking about something that you don't have, and then they can empower your ecosystem. So playing from an ecosystem perspective is way better than having a closed loop mentality. So definitely friend.
Fantastic. That's great to hear. I think for both us and also for the audience out there. Building on something and changing gears a bit and looking at something I think you've all mentioned, especially you, Nico, I think you talked about costs. And I think the SDGs talk about remittances being at a cost, ideally should be at a cost of about 3%. We've already discussed that at an Africa level, it's at 8%, so it's pretty high up for a sub-Saharan Africa position. What do you think are some of those cost drivers, and how do you think we could reduce it? Sorry, I think there's a bit of reverberation. How do you think we should reduce it? Again, take into consideration what we discussed about working in collaboration.
Yeah. So how do we reduce costs?
How do we reduce the cost?
So
because we've understood that essentially, or let me put it this way, an often used narrative that part of the reasons why remittances are not as widely spread as they are is basically because of the high cost. So there's a narrative that if you reduce the cost, you will see a boom in terms of remittances because people will be able to send money more cost economically. So is that fact or is that just a lazy narrative?
Yeah. Okay. Maybe we can look at, and I won't use Kenya as the market. Let's use Tanzania for the market, just for example purposes. So if we look at what goes into bringing money from somebody who's sitting in let's say the US, to somebody who's sitting at home in Dar es Salaam, what happens in between? So on one side, a big chunk of costs happen on the US side. When you're processing the card, if the payment is being done by a card, you have to pay card fees. And those card fees, there's no capping on interchange in the US. So you're looking at close to 2% gone, just like that. Now, the other major cost driver is on the payout piece. And I think telcos have done a really good job in country. And then you have IMTO fees as well, that are charged. And a lot of times the telcos like to spin the narrative that, hey, this is the cost of running AML, screens, et cetera, those real-time screens, et cetera. Of course, as a fintech, we do that as well. And as a fintech, I'm actually happy to pay for each of those screens, and it would amount to probably one cent or so per screen. But the reality is, the fee difference, if I'm paying in Tanzania, the traditional fee from a Vodacom, a Tigo, or an Airtel is $1. If the median transaction size is $40, you're looking at over 2% just in the payout fee alone. Now, this isn't even, we're not even talking about revenue for Nala, and we have, of course, operations that we need to run, et cetera, so we need to charge a small bit as well. But I think the reality is, if you could tackle the cost, the inbound piece of card payments, or you could have better like real-time banking payments in the US with reduced fraud, because ACH is extremely fraud-prone and very time-consuming 3-day settlements. And you could also address the payout fees piece, which is very addressable. I think if everybody looked at it as not as a cost line, but as a trying to facilitate value into your ecosystem, costs could automatically overnight reduce by 2.5%. That's in our control.
Yeah, that is in our control. Fantastic. Andrew and Naima, what are your thoughts about the 3% SDG goal? Do you think it's attainable, or do you think it's far-fetched?
So let me go first, because shots have been fired. Just to clarify, I think we were the first ones to bring the cost of remittance down to 3.5 within the East African region, right? So we are not at 8%. The people who are 8% will say why. But yeah, so from a telco perspective, or from Safaricom, our cost of remittance is at 3.5. But I do agree with Nick as well, Nico. Because one of the key things to barrier of entry, of course, is cost, right? But then the question has always been, why is the local payments cost cheaper than the international payments? Well, one of the key things is this infrastructure. So there's a lot of infrastructure in play, and there's a lot of fragmentation. So if I'm connecting to your API and I have to connect to somebody else, there is a cost element that is there. So there is definitely, it is not as simplified as how we do connect in a local way. So the question should be changed to, what then can we do from an industry perspective to ensure the infrastructure is actually in place for us to enable these payments to actually come down? Have we done enough? No, because I know from an East African region, yes, we have brought the cost down. But then what about the scaling to all the other regions? What about all the other African countries, South Africa, and all those things? So I think this is one of the key things that we really are passionate about. If we solve the infrastructure issue, if we solve the regulatory issue, and have one standard way, one standard fee of getting compliance and all those things, I think then the cost of remittance should be able to come down. But again, I say it's in the hands of us as players and how we do our business. Yeah.
Fantastic. Andrew, any thoughts?
So, first the question, the way you asked, is it factual or not? And I would say it is actually factual from this sense. If you look at remittance 20 years ago, the likes when Western Union was only there, and you find that the spread then used to be, on the FX side, 7 to 8%. And the commission itself, the charges are quite high even. But over time, as more and more competitors then came to the market, this kept reducing. What has happened is more and more remittances are coming across. But then again, the question then lies, of all these players that you have, because Nicholas tried to at least pinpoint the various players that are there. The concern then, and the reason why we are getting to the 3% slowly and slowly, is you find that even when players who come in then can reduce that cost, then do not reduce the cost. What they do is they want to ride on the high cost to be able to make more money, all right? So if today even look at the open APIs in Europe, they really cut a lot of those ACH costs and everything. But the cost of doing a transaction still is quite high using the same open APIs. Why? Because the people who have actually integrated in those particular open APIs to come and do, let's say, integration with Equity Bank, for example, you find that the fee they're charging you is quite high. It's even better for me just to go to Nikolai and forget about those particular open APIs. So there's a lot of play that then needs to be done in the sense of anyone who is in a position to help reduce those costs, instead of maximizing profits initially, should reduce the cost. So there's that greed still, unfortunately everyone has some level of greed that needs to be checked into, and probably that's why the regulators then come in and say, for you to do this, then the costs look like this, because that then becomes important. In terms of then, another thing being, how then can you help reduce the cost? So, like for example, if we look at Equity, and this is why we launched the inter-country remittances, of course, starting off with the equity in Kenya, there's going to be a third party for me to deliver to that bank. So, as Neema is saying, there's a need to look at how do you collaborate and make this better. Then what kind of APIs, what kind of integrations do you make to make it much better to ensure that those costs start making sense? Even the currency itself across Africa, as long as we keep on relying on a foreign currency for settlement, because that's a problem cuts across all of us here. That particular fact that we do not, even our own currency is not fungible within Africa, the cost within Africa is going to be high, because I want to send money from here to Ghana. I have to use Nala. But then Nala now, at the same time, also has to settle someone in US dollars, has to be paid in US dollars here, or euro. So that, again, that kind of currency brings in another aspect of costs that we don't see. It might be hidden, but it's actually a huge cost and a big, huge chunk of that remittance. So there's a lot of work to be done for us to get to the 3%. Are we there yet? No. Are we heading there? I think we are. The only problem is it's in chunks. It's in small chunks. Safaricom has reduced theirs to 3.5. We have reduced our own for inter-country. But then what happens with the rest of it? Right? So that's what the problem. Nala might come and say, look, I want fine rates. So those fine rates become another cost into it. So it really more of there's a lot to be done to reduce that cost. And if the past is anything to go by, then it means that checking on the costs, we are probably going to get more remittances coming through, particularly those ones for trade with the purpose, the B2BCs, the C2Bs, then those can start increasing. Yeah.
And as we're getting towards the end of this panel, I'm thinking about something you've also just said about the Africa Free Trade Agreement, right? So Africa is essentially going to become one block similar to Europe, 54 markets with a potential of about 450 billion in terms of intra-Africa trade. So it's a huge opportunity. And as you're saying, if we can reduce the costs, and also probably also touch on something else, Naima, you mentioned, and Nico, you mentioned, which is not working in silos, and also being able to work collaboratively, there are bigger opportunities. I'd like you to mention maybe some more of the work that you're doing, maybe across Africa, because intra-Africa flows is another big part, right? We've talked quite a lot about inflows into Africa. We've talked, I think, Nico, you mentioned getting licenses and being able to send out of Africa. But I think the opportunity that AFTA presents is also being able to send across Africa, right? Is there anything that your organization is doing in that space before we open up to audience questions?
Would you want to pick that question?
We'll start with you.
Okay, thanks for that. Yes. So Equity, as a group, we have what we call the Africa Recovery and Resilience Plan, right? The RRP, that's what you've coined it to be. And what that is basically how then do you improve trade across Africa? So it has various pillars, and one of the pillars is trade, and that's where remittance actually falls in. So then the question is, how do you improve this trade across Africa? And so some of the things you're doing is getting into meaningful, or what we call purposeful partnerships across Africa to ensure that then we can be able to increase this trade that cuts across the various partnerships that you've mentioned. So partnerships across that Africa to ensure that then we are able to enable someone, like example I was giving, exporting to T2 Egypt, then who in Egypt can make sure that that payment is paid or facilitated on a retail basis. Of course, now the point is you can't, of course, get into every country because that's quite costly, despite the fact that we have a strategy for merger and acquisition. However, trade becomes important, remittance falls into place. So those partnerships become key. Various engagements with various countries, MOUs with some countries, some you'll be seeing out in the market quite soon, being announced about the various MOUs with various countries. And all this is to say then, how do you open the doors and make Africa borderless? And keeping in mind that for trade to happen, money must move, right? Or rather anything. I hope we might get back to better trade, we never know. But money must move. So for that to happen, then Equity is in the center of it, saying, how then do we facilitate as a bank? All the tools we have, how do we make it better? And then also, how do you reduce the fact that we always say, why am I making a payment here? And that payment I'm making here goes to US and back. So we even get to a point where I'm saying, if I swipe my card, for example, in DRC, it doesn't need to go to US and come back. That card needs to be able just to fly from US, really get from DRC into Kenya and make the payment. So those kind of partnerships, those kind of engagements, then is what we're looking at as a bank to ensure that then we can facilitate that trade movement of money to facilitate the trade to move also across. Yes.
Fantastic. Naima, you talked about M-Pesa Africa and creating one platform. Is that the vision as well?
Yeah, so that's one of the visions that we have where we are creating, but that's from an API perspective to our partners so that they don't have to integrate into all the countries one by one, but even amongst ourselves as organizations. So we've done P2P very well, but what we are looking at is we've equally done a bit of cash out. If you go to Tanzania, you can be able to cash out your money. We want to equally do merchant payment, so in and out of country. Where you can still walk with your wallet and do merchant. So of course there is that whole, but key focus for us is equally on the African trade from a merchant perspective, from an SME perspective. We understand most of our merchants actually get goods from Uganda, right? So there is a lot of that in that space. So how do I enable my merchant here with a merchant till who doesn't need to cash out to actually go and purchase goods in Uganda from a Ugandan MTN merchant till or whatever bank they have. So that's what we are looking at in terms of easing that customer experience so that you don't actually have to remove the money. But I'll still insist, like what Andrew has said, FCY becomes a very big play here. And if we cannot then go ahead and ensure that there are some certain technologies that are put in place to ensure that then this volatility of currency is reduced, then it might not make sense for some of the organizations, right? Because then the cost becomes higher than what you are actually getting in. Yeah. So how do we then, as Africa, then say, if we are transacting amongst ourselves, must we really transact in USD? Exactly. Must the conversion, why can I not have a conversion in Kenya shillings or a TZ? Or, like Kwach, how can we then make it so simple enough then we don't have to have this cost of working capital. Because remember, cost of working capital is the worst. This is when partners come to us and tell us, I'm not making any margin, and you're wondering, and even that dollar I'm not making, so who's making this money? Yeah, so I think for me, those are the key things that we need to look at. But in terms of opening it up, yes, we do need, and we need to actually accelerate it and work together. So one of the key things that we're happy about is working with partnerships, like Andrew has said. So we have partnership in Nigeria, away from what you'd call our markets. Yeah.
Excellent. Nico, is Nala looking, obviously you are growing markets within the Africa space, but do you see the intra-Africa flows as an area, or are you taking it step by step?
Yeah. I think when you're building a startup, you have to really pick your battles because there's so many opportunities and things to be done. So intra-Africa is not a focus for us at the moment, although we of course see the challenges. And we have for example, team members who are from Tanzania but live and work in Kenya, and maybe they're getting paid in Tanzania, and they need to, so there's the challenges that are there without a doubt. Very exciting to see sort of what happens as different regions start to develop and have a more unified way in terms of how they approach regulation. But yeah, the currency stability piece is a major one, right? And that will only be solved when you have a match of dollars and a match of Kenyan shillings, and they balance each other out. So what can we all be doing to promote exports in these countries, promote more foreign direct investment, to help ensure that these are not net import markets across the continent, that, funds are being balanced. Then it will be commercially, it will make tons of sense to be trading with your neighbor as opposed to trading, with another continent.
I totally agree. And on that, I'd like to open up for any questions from the audience. Perhaps maybe there's questions. I know today, I think in the news, it was the highest level of dollars held in the economy.
In the banks.
Yes, exactly. Okay, you're smiling. But I think the rest are perhaps not smiling as much. So I'd like to open it up to any questions from the audience before we come back to the panel for their closing remarks. Any questions, any burning questions based on these discussions that we've had? There's one here. Thank you.
Hi everyone.
Hi.
My name is Shamte. I'm the manager for payment operations for the NALA. So I have a few questions. Some of them you have addressed, but it's a burning question for me, given that I'm going to close our books this month. and we have ongoing conversation with our partners at Equity on payout cost. So the first question is to Madam Naima. So looking at us, FinTech, right? We'd like to know what is the priority level of remittance in M-Pesa compared to other M-Pesa products, such as the local P2P. The reason why I'm asking that is because if you look at us, FinTech, would rather partner with Equity because Equity has more innovations than M-Pesa, right? Why? When I do integration with Equity, I'm able to offer other services on the same API, like FX, like card collection, etc. But that's not the case for telco, M-Pesa. So the question is, how is priority for you, remittance itself? That is one. And then two is on the cost. I know you talked about the cost. So the question is, why does M-Pesa, as a primary recipient entity, not providing a competitive payout cost for remittance companies compared to partners like Equity? And this is based on our experience in different markets. So you'd find the markets where NAL has direct integration with a telco, you'd find the costs are super expensive, right? But if you take that integration with a bank, Equity charges free to do payouts to their recipients, right? So why is that the case? I'm asking that because when I'm asking Andrew to give me good commercials, he'll be like, oh, M-Pesa charges me way high, so I cannot do that for you. So those are my two questions.
Yeah, I'll start with the cost.
Give you a minute.
Cost is always relative, right? So the question on cost is why we are high. I'm not sure we are high to begin with. But when it comes to, so we do have fintechs locally who are integrated with us, and they do have their local charges, right? And I keep saying the local charges is way cheaper than international ones. Why? Because there's so much more we have to do from an international integration perspective that increases our cost and our margins then become small. So in any business, you have to look at what your business margins are. I'm not a bank, so the license that Andrew has is not the license that I have. So let's agree on that one. I have disadvantages because there's so much I can do, so I can't give you an overdraft facility. That's one thing, I'm not allowed, right? So any pre-funding I do for any international partner, I'm incurring that cost. That's number one. Number two, I can't be able to make money from my FX the way Andrew can be able to make money from his FX. So definitely, if you put us on the same pedestal, then we are not equal. If I get a banking license today, come to me, I'll give it for you for free. But as long as I don't have that banking license, there are things that we can be able to do and there are things that we can't be able to do, and that is why we collaborate with partners. In terms of costs, definitely it has to be an internal, and this cost is not even to the customer, it's a B2B cost. So I can't charge you 8%, and what banks charge right now is between actually 10 to 8%. I'm not charging that, I'm charging 3.5. If I'm charging 3.5, then I've let go of around, 5% in order for my end customer to benefit. So I have to look at what business then we are doing for all of us to be able to ensure that remittance reaches the end customer. Because at the end of the day, it's not a B2B play, it's a B2B to C play. Because who's doing the remittance? It's the customer. If we make the cost of remittance high, then the customer will not remit any money into the country. And we've seen Kenya now is actually relying on remittance, which should not be the case. We should be able to rely on agriculture, and so it becomes a bit hard for us equally as an entity because you're now being put out there. Andrew and I spend most of our time at the regulator explaining why we are not. It's like now we have KPI to actually bring remittance in. We can't slack off, and it should never be that way, but that's beside the point. So that's on cost. The first thing you'd asked is...
The first one, I think, the way that I understood the question is, I think in terms of integration, it was a question around, it's very easy, I guess, there seems to be some level of threshold maybe when M-Pesa can integrate with smaller fintech players. And so he was talking about being able to integrate, I think, easier with somebody like Equity Bank versus integrations with Safaricom. So maybe, is there a threshold, maybe you say, we can't do API integrations unless you're this particular size, or are there any threshold limits that you think about?
yes, if we look at the value spent on a partner onboarding, right, then we have to look at what the commercials, if the commercial will make sense. And this is where, again, it goes back to, if I'm charging you, like he says, if I use his example, if I'm charging you $1 for a transaction and you're hardly bringing in 200,000 as volume, then would it make sense for you to integrate to me? So as Safaricom, we have 3 ways to integrate to us. You can come directly to us. We are going to have a commercial different. You can go through our aggregators, which we put out there, where they aggregate in volume and then they still terminate to us. You can go through our local partners, and our local partners include the banks, include the PSPs, include the MRPs or PSPs who've been licensed to do MRP. So if you look at that way, we've really opened the ecosystem. So it just depends with what you actually want to do from a commercial perspective. You want to come directly to us, let's talk. We'll come directly to us. But then will you agree to the commercials?
Let's see.
Yeah.
Great. Were there any other further questions from the floor? Okay, then I'll turn back to the panelists. I want to say, if you had a magic wand and you could change anything about remittances, as a parting shot, what would you change?
Ladies first. Ladies first.
I think Naima has been processing quite a lot. I want to give it to
Nicole.
Nicole, I think we'll start with you.
Okay. If there's one thing that I'd change, I'm trying to think of something I've not said.
Yeah. Or even just a parting shot.
Okay.
There's nothing
A
that
parting
you can
shot.
think that
Well,
you
okay,
want to change.
my parting shot would then be, how can we all collectively work more to drive more, dollars into the markets, essentially? How can we make it easier for individuals to come online, to use formal channels where it can be more easily tracked, going through formal channels so that dollars are available with the banks for importers so that we stabilize currency. I think that's probably on everybody's mind for the past 9 months, has been just how volatile the Kenyan shilling has been. So what can we do, I guess, to think collectively, to even if it's for a short term in time, to partner, work strongly together to drive more direct investment into the country.
Yeah. I think I've always been caught quoting Darren because I like what he says is, for me, how can we make, and it's not only remittance, the question I have is, does cross-border payment count as remittance? There's that gray area where what's payments and what's remittance. But if you look at what he says is how we've gotten it right with local payments in terms of cost and in terms of how the infrastructure has been laid. But we don't get it right internationally. So how seamless can we be? How interoperable can we be? What infrastructures do we need to put in place? That would be my parting shot. And that's what keeps me, I have sleepless nights because of that, is how do we resolve this, especially most from a B2B play? Because that's the biggest thing, is how do we ensure that we have better commercials, better infrastructure, and then interoperability then becomes a play, and seamless customer experience then takes place. Yeah.
Fantastic. Andrew.
That's quite an interesting question. As I was thinking through the points, I'm thinking 2 things. One, how do you make interoperability across borders work? Ensuring that there's actually no border. If I want to send money just at a click of a button, I'm able to get money across to whichever country it is. How do you make it better? And because that then would improve the livelihood of quite a number of people, transform a lot of lives, and also on top of that increase trade. So that for me is key. How then would we just make interoperability quite easy? And number 2, this issue of various different currencies and different levels. So the FCY today, dollar against Kenya shillings is not the same against Tanzania, it's not the same as Uganda. How then can we just make it level? So now it just becomes easy that I have Kenya shillings, you have KZ shillings, you can change. And take note, I'm just talking about Africa because there's a huge opportunity right there. So how then do you just make it easy? Naira, today we have so many companies that are holding value in Naira, but they can't remove that value. Companies here are borrowing every other day because their value in Ghana, in cedis, but they can't get that money. So how then do you just make these exchange rates, just become more fungible and more of a level so that they can be able to do that trade. So those are the things I would change, actually. If you ask me, those 2 things mainly is the first thing I would do. Yes.
Fantastic.
And maybe Sharon, I would just want to add, and it's quite interesting. I think the reason why we are seeing all these things is because of legacy players.
Yes.
Right? So we've had people who
have been in this industry, we've done things a certain way for the longest, 60 years plus, right? But if you look at even now what is happening in the UAE, they're changing that. And they're saying, actually, these costs have become too much. We're not going to agree this. So they're building their own card system, right? So this is what pushes, this is what the problem with cost, it pushes people to innovate better. And it becomes then a play. So for us, I think before we are pushed to start innovating better, we need to start now to see how can we play in this space, but also let's stop relying on these legacy people in showing us how they've been doing their commercial models. Because I feel like what we do, especially in Africa or more so in Kenya, is we replicate. It's like what has not broken, don't fix. But we need to understand that we need to fix because our customers, like Michael Joseph says, they're peculiar. And true to the word, it's actually true. They need better, they need faster, and so different comes in. What you give in the US is not necessarily what you'll give in Kenya. And so international players have really had a challenge coming to Africa and giving the same model in Africa.
So build for Africa.
Yes.
We need to build
Yeah,
for
build
Africa.
for Africa.
Build for ourselves.
So I think that's a really good place to stop. It's truly what they say. Time flies when you're having fun. I really enjoyed this panel. I want to thank my fellow panelists. I think you gave a really invigorating and robust discussion. Hopefully, as the audience, you also found a lot of value in the discussion that we had. And I'd like to just highlight again and summarize some of the key points that came across. Really, it's about innovation. It's about building for Africa. It's about collaboration and partnership to be able to reduce the areas of challenges, including cost. Just to summarize so much, I can't summarize everything in 1 hour that we've discussed, but I've really, really enjoyed it, and thank you again.
Thank you.
A hearty applause to the panelists this evening. Thank you very much, Asanteni Sana. And thank you to our moderator for this very last session today, Sharon Kinyanjui, founder, Diaspora Bridges Advisory, for conducting that very active and very informative session. A round of applause for Sharon. And thank you for also giving us a short summary of what we've gone through, so I don't need to go back and look at everything because I'd written quite a lot. But if I may just point out that there are opportunities moving forward and towards purpose-driven remittances so that we avoid that black tax thing. Yeah, I know for Gen Zs, that's something you're keen to drop. But yes, for the older generation, you still have to do so. So yes, thank you so much has been discussed, including on AI and machine learning, and how AI can be used to beat manual approval processes by understanding patterns, matters to do. And it's interesting that all the institutions represented on stage this afternoon have all agreed that the issue of cost when it comes to remittances is key, and that probably through collaborations and other things, cross-border MOUs and stuff like that, costs need to come down, and therefore that's room for innovation. Ladies and gentlemen, thank you so much for being part of this conversation, but let me just tell you what is coming up tomorrow, because as you can see, it's getting hotter as we go along. And my phone needs to start collaborating with me sooner rather than later. Yes, got it. Yes, the very first session tomorrow morning is going to be on evolution of marketing in the digital world. It will be moderated by Zuhura Ogada, Marketing Association of Kenya Chair Lady. And that will kick off at about 9. Remember, our sessions tomorrow start from 8:30. So as early as 8:30, you can start coming in. Then 8:45 or thereabout, we kick off with the very first session on evolution of marketing in the digital world. After that, we're going to have another session on the digital platform economy, and we're saying it is red hot. You don't want to miss that one. After that, another conversation. As I said, these conversations overlap. Some questions you may have had today you didn't get a chance to ask can still be relevant tomorrow. We'll be having a session, an interesting one, our third session tomorrow on man versus machine in digital marketing, a battle of wits and algorithms. Yes? Then later in the afternoon, add to CAT, matters e-commerce. And our final session tomorrow, Packs and Recreation, the HR edition. That is tomorrow. So it's going to be a jam-packed session as well, from morning all the way till evening. Yeah? So do stand by for that. You're welcome tomorrow. And I'm sure that your colleagues who are not able to make it to today's sessions, they can still do so tomorrow. Ask them to come over. Of course, they can still register on our website as well. And as far as social media is concerned, a quick reminder of our social media pages. Digital and Technology Week across Facebook, Instagram, and LinkedIn. When it comes to X, formerly Twitter, is at SMW Week. Let me confirm, especially that one for X. SMW Nairobi, sorry. At SMW Nairobi, that's our handle on X, which is formerly Twitter. On all the other three social media pages, that's LinkedIn, Instagram, and Facebook, it's Digital and Technology Week. Also allow me to briefly go through our sponsors and appreciate our sponsors and partners who've made this event possible. Ministry of Information, Communications, and the Digital Economy. A round of applause. Asante sana. Thank you for that. Association of Fintechs in Kenya, AFIK. Another round of applause. In that same spirit, tuendelee. Citizen Digital. Royal Media Services, which is part of that. Hot 96. The Institute of Human Resource Management, Kenya, IHRM. Samsung, who are also exhibiting at the back. A round of applause. Cisco, who have a stand there alongside Reddington, are part of our sponsors and partners. Kenya Institute of Bankers. Marketing Society of Kenya, MSK. And last but definitely not least, the geniuses behind the organization of this event, Go Gaga Experiential. A round of applause for Go Gaga. So, ladies and gentlemen, we have one more session. And this one is a networking session. So don't go after this. You can still enjoy some refreshments. Take time to interact. Know who came today, jua jina yake, or jua social media yako ni gani. And remember, if at all you get to post anything on our social media, interact with us. Use the hashtag Digital and Technology Week. And remember, as the icing on the cake later this week, we're going to be having the Digital Media Awards on Friday evening. We'll give you more details on that as we go along. For now, my name is Fred Indimuli. I've been your host today. Tomorrow, tukutane hapa tena. Have a lovely evening.